confusion does remain over U.S. President Donald Trump's tariff announcement set for April 2nd. Yesterday, Trump said he will announce tariffs on auto imports in the coming days, indicated nations will receive breaks from next week's so-called reciprocal tariffs, but also announcing a 25% tariff on other nations purchasing Venezuelan oil starting on April 2nd, and seems to be adding to a list of threats as part of his plan to use America's economic clout as leverage to achieve foreign and domestic policy goals. All right, I want to bring in Colin Stewart, our guest host this morning, to talk a little bit more about how the market is reacting to all of this. Colin, it's great to see you.
Good to be here.
I guess the headline over the last 24 hours, the idea of secondary tariffs, is sort of a new concept perhaps for us to think about. If certain countries are working with other countries, you might pay an additional tariff price. How does the market make sense of those kinds of headlines, in your opinion?
Yeah, it's very challenging. I mean, I think the broader theme we see is just this constant uncertainty, constant new information. It's very difficult. I mean, we've read hundreds of pieces from strategists, listened to conference calls with specialists on Washington, and I think at the end of the day, the truth is nobody really knows exactly what's going to happen, and that's sort of this chaos and unpredictability we're seeing from the Trump administration. We saw over the weekend some comments from the administration that there might be some breaks, quote unquote, on some of these reciprocal tariffs that are slated to come in place on April 2nd. But, it would be our view that that uncertainty is likely not to be over immediately on April 2nd. And it's, I think the unpredictability, the uncertainty, the constant back and forth is likely to continue. And overall, I would say that's why we think there just should be, sort of a higher risk premium on the market here. And investors should try to be cautious or somewhat conservatively positioned in this environment.
Are you comparing this Trump administration to the first Trump presidency at all? I mean, it obviously feels different. Should it feel different for the markets, do you think?
Yeah, I think it is. I mean, I think the Trump is emboldened. The policies that he's following and sort of the breaking of the norms with, with longtime allies, even in some cases, perhaps, not sort of following normal protocol and listening to laws that are been put in place by Congress and things like that. So, yeah, I just think that the level of uncertainty is heightened here. And, we're also working from a place, unlike the first Trump administration, where the markets at that point were lower in the U.S. The valuation multiples were more depressed, and we had a big rally when Trump was first elected. But this time around, I think we're working from a place where optimism has been very high, and market multiples in the U.S. in particular were quite high. I mean, they have corrected here a little bit, but overall, we're still talking about, very high end of norms for valuation multiples in the U.S. market.
What do you make of the fact that we are now in a federal election campaign here, and we're going to get lots of rhetoric? Countries around the world have to respond to Trump, including Canada. But again, this language has implications for our economy, global economies, and does it have implications for the stock market worldwide as well?
Absolutely. I mean, I think we've seen, uncertainty sort of around the world with various U.S. allies and trading partners. Canada, that uncertainty is heightened by the fact, as you mentioned, that we're in the midst of a federal election coming up in very short order. But I think the level of pessimism in our view towards Canada and the Canadian equity market and Canadian businesses is very high. So as a result, the valuation multiples are lower. The market has not had the run over the last several years that the U.S. equity market has. So I think we're sort of, from an investor standpoint, you're coming from a better place, that expectations are lower. And we think that, regardless of sort of who wins in the upcoming federal election, that we are going to see some positive change with perhaps less regulation, more unity across the country, breaking down interprovincial trade barriers, perhaps more business-friendly community, whether it is the Liberals or the Conservatives that are successful in the upcoming election. And I think, combining that with negative sentiment on Canada and reasonable valuation multiples, particularly compared to our neighbors to the south, is a reasonably good setup. Maybe not in the very short term, but I think over the next few years, Canada is going to look like a pretty good place to invest.
You're not alone in being in the Buy Canada stock category, but at the same time, we were citing this week some new survey work by Nanos on behalf of Bloomberg that shows that Canadians are pretty much as pessimistic today about where the economy is going to be over the next 6 months as they were during the COVID pandemic. Now, obviously, that could change. Politics could change sentiment, but it seems to already be bleeding into business realities. This week, we heard from a big technology company, Lightspeed. And they said, people aren't shopping or eating out as much, so they're literally using our technology at those locations less, and so they had to lower their revenue outlook. So how do you try to figure that out, the math on that, when investments and, attractive valuations still depend on profit potential for businesses?
Yeah, well, I did obviously follow that announcement by Lightspeed the other day, and I would say that is, among other signs we're seeing. We saw one of the U.S. airline companies a couple of weeks lower guidance and say that travel demand is weakened. We're seeing Lightspeed say that, February, March transaction demand for things like hotels, restaurants is lowered, but that's not just a Canadian phenomenon. I mean, Lightspeed's products are all across the U.S. and global. So I think, we're seeing sort of this real-time reaction, as they say, and the soft economic data really weakening, and maybe the hard data still looking good. So we are, I would say, near term, of the opinion that Q1 earnings are likely not going to be great for many companies, not just in Canada, but in the U.S. as well. We are seeing sort of this uncertainty bleed through to consumer behavior, consumers perhaps spending a little less money, and even in business behavior, I think companies not going ahead with planned M&A, pulling back on CapEx plans a little bit, depending on the industry they're in. So, this broader level of uncertainty that I think has largely been created by this policy uncertainty is now, we believe, impacting real-time demand from businesses and consumers. And I agree with you, John, that in the short term, that's not great for earnings and for the economy overall, not just in Canada, but I think in North America.
Okay, well, against that backdrop, Colin, we're going to take a break, but we'll come back, and Colin's going